Good afternoon, everyone. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. And a couple of things. We will be interviewing Tim that'll be at Tim Ward at 3:30, I believe. Yep, 3:30. And let's just run the numbers. And I do the Tiger Technicians Hour, 10 o'clock to 11 o'clock every market day. And my service here is the opening call, daily newsletter. Let's look at this. We've got the Dow down 51 at 44,870. After that PPI reading that was very, very much high, just way higher than anticipated, the market fell quite sharply after a spectacular session yesterday. But buying just keeps coming in. I mean, the Dow is now only down 48 points. It's in leg C in the Chapman methodology. You always anticipate that a buy signal going to a buy mode, which this is in, and we remain long. We had a short position for a little while, made some money, and now we're back to a long position. This is very interesting because within the context of the this downtrend line that you see here, I call this like an expanding cone. When the price breaks out above it, you start to look for left side highs. That would be 45,016 as the next higher as a target. So far, this is really good action. If you look at the S&P, it made an all-time high yesterday. And it is trying to tackle that. It's down only 55 cents at 64.66, having slumped down to the 64.41 area. So it's only 24 points, not such a big deal. But all it needs to do is to go 1 penny above the 64.80.28 high of yesterday. And that starts another leg to the upside. And the weekly chart has gone to a leg D in Chapman Wave methodology. We're always counting those peaks, peak A, then B, C. If it gets upgraded to a buy signal, it goes to at least a D. It can go higher, but D is your objective. And here it is, already at the objective in the weekly chart. And the monthly chart is still very strong. Now let's go to the QQQ. NDX 100. 580 round number right now, up down 34 cents at an all-time high yesterday, and all it has to do is to go 1 penny above the 583.32 high of yesterday, and that either continues this leg G. If it's today, you could still do it, or if it's tomorrow, it goes. What'll be really interesting in this particular technique, there is never an H. That means if we go, we don't make a new high today, but tomorrow or Monday we do. That says there's a new buy signal that's gone to a buy mode in a leg B, and it should go even higher next week. So this is really quite an important moment all around. And IWM, the Russell 2000. Now, this is very important. It's come back very nicely. It's only down 3 at 228.22. It made an all-time high. It made a recovery high yesterday. It went to 230. I forgot to type that in. 231.46. Well, the low yesterday on that big gap up was 227.83. Well, it got me a little scared this morning because it actually went below that. Not only that, it went below the candle of Tuesday, the high of Tuesday. This is really unusual for a powerful move to give back so much. But in the meantime, the technicals are still pretty good. The stochastic findings gotten to 82%. That's important. And then you've got this weekly chart with this whole cluster of resistance around about the 230 area, 230 to 231. If any time next week it just closes once into the 232 area, it says, you know what? In this particular phase, not after a big pullback, but in this phase, we might want to see 244.98, the all-time high of November, achieved. And that's the small caps, the Russell 2000. There has been a rotation into the small caps. It needs to be sustained. That's the most important thing. At the same time, I just want you to look at the semiconductors, because semiconductors are very important. Where they go, the general market tends to go. Made an all-time high yesterday. It's pulled back today. It's a nice big green candle, even though it's down 54 at 300.74. So I think it's the jobless numbers. If the jobless numbers are really, if the market responds very negatively, that's going to be one thing. But if the market responds positively tomorrow to the jobless numbers, that'll be very important, because here again, if there's a higher high than the high of yesterday, which is at 302.98, you go to 302.99 tomorrow, and that starts another buy signal to buy mode for another couple of highs into next week. Very important. Okay, let's go to gold is down. So we've been gold for subscribers. We've been in gold for a long time. It's done very nicely. It's just stuck in this range. Look, the rectangle range goes to the top, pulls back, and I would say 33.02 is going to be key support. Takes that out, that's the real problem. But right now we've got this technique that I use. I had my webinar on Tuesday. If you're interested, you can become a subscriber and get that webinar. I went through a lot of really important. These are technicals, trying to put together the market action and reaction in all the different sectors, and then mentioning that there's very likely to be some kind of rotation where the IWM starts to garner strength, and you see stocks like a GE that's been fantastic. Take a breather. Look at that for GE. Look at Robinhood taking a bit of a breather. Still doing quite nicely, but yep, pulling back. Microsoft hasn't broken out since the 555 high that was made in July. It's at 520. So to go back to gold, because this has to do with the rotation, the GDX, look, it's holding very nicely here. This is the gold miners vectors, and look at this technique, same technique I was showing you as the support in the gold contract. So the GDX gold miners has the weekly chart, this inside track repellent zone. The moment it starts to trade in the, if it can, in the 61, 62 area, that's a breakout to the upside, and right now it's somewhat of a resistance, but it still has very good support. Silver at this particular point, silver is pulling back 50 cents at 38.09. Weekly chart still pretty good. The daily chart has made this pattern that pulls back sharply, has about a 50% retracement, and now it can either arch over or break out. So under 37.20, it starts to take on water. It starts to pull back, and over 39.10, it's back in this range. It's just holding beautifully in the higher range. What am I missing? I'm missing bonds. Well, bonds are down almost a point. 114 and 22 30 seconds. This means that the TBT, you can see it right here. This is the ultra short limit 20-year Treasury bond ETF in the lower range, but really just kind of stable at a higher range. So I'll be back in a moment. This is Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. The Dow is now only down 21. The S&P is unchanged. I'll be right back after these important messages.